listen, my state taxes I paid last year to Illinois were $30,000 or something, right? I only got credit for 10. Next year I could get credit for up to 40. So if I was kind of close or that limitation was really hitting me, geez, maybe I wasn't itemizing previously. Now next year I would be. One of the things we talk about, I know you do too, is like at this time of the year before December 31st is to say, what does it actually look like this year? What will it look like with next year's tax law? And you actually have to take a look at that, right?
Hi, I'm Bridget Sullivan Ramel. I've got a fee only financial planning practice in Chicago, Illinois.
And I'm John Shear. I've got a fee only financial planning practice in Middleton, Wisconsin. Before we get into charitable giving changes to the tax law, I want to remind everybody hit that subscribe button, help other people find this information on YouTube. And with that, Bridget, let's dig into the new big beautiful tax bill and how it really affects people this year and next with their charitable giving.
Yeah, so it's going to have an impact for charitable giving this year. And there's kind of a few different flavors of it. Okay. So, what I want to do is talk about where we're going to end up in 2026 and then what's happening in 2025 and how you might want to change some of your behavior in 2025 in preparation for 2026 and how much of a difference.
Awesome.
Okay. So, where we're going to end up in 2026 is two types of charitable contributions, two ways to take it. You can only do one or the other. The first is if you're not itemizing. So this is a deduction for non-itemizers, like we had, I think during COVID, there was a special
That's
deduction
right.
for non-itemizers. Each person, so if you're married, you get two, can have $1,000 deduction for charitable contributions. Now they say it's supposed to be cash, so that would mean cash, credit cards, Venmo, that kind of stuff, and to 501(c) institutions. So it doesn't count for charities. And in this case, this deduction, donor advised fund, doesn't work either. Okay, so it's got to be cash.
Got
It
it.
can't be stock or that kind of thing.
Cash, and it's not the stuff, right? I'm not giving my
No,
thing, my whatever dressers or old used clothes, that sort of thing.
right.
It's just literally dollars
You
being
got
given.
items for that to donate stuff or to donate stock. But if you're donating cash, you get $1,000 for each person on a married filing jointly return, or $1,000 if you're single. And again, it starts in 2026. Okay. So that's the first part, first way to take charitable contributions in 2026. The second way to take it in 2026 is if you're itemizing. Okay. And briefly, itemizing is a whole list of things, mortgage interests, state and local income tax, charitable contributions are the biggest. Sometimes medical expenses get in there too, depending on how big they are. So if this whole list is bigger than the standard deduction, which has increased as part of the big beautiful one, then you take the itemized deductions. Itemizers usually know who they are. So in 2026, there's going to be two things that I think are going to impact the charity. And let me talk about the direct charity first. It's your charitable deductions are going to be subject to 0.5% of your AGI reduction. All right. So, goodness gracious, who understands fractions? Who understands multiplying? Do we remember
What
any?
about percentages and fractions together? That gets really
I
exciting,
know,
right?
and we get into your AGI, your adjusted gross income. All right. So, we need an example here. Let's say our
Right,
adjusted gross income is $100,000
right.
and we donate 2,000. Okay. So 100,000 times 0.5%. Again, you're using 0.5% of 100,000 turns out to be $500. All right. So you donated $2,000, then you have to subtract that 500 and you end up with $1,500 deduction. You would make that donation in 2025 where you don't have that reduction instead of 2026. All right.
Yeah, so that's the 26 rule is that 0.5% of your income basically you don't get any credit for, right? But this year in 25, that doesn't kick in, right?
Exactly. So if you're itemizing, it makes it can make a difference if you're donating in 2025 or 2026 and how much deduction you're going to get. But the other thing about itemizing in 2026, and this is a little not quite exactly in the lane of charity, but it'll make a difference, is that I think more people are going to be itemizing in 2026 because the salt, I think that's because everything people like spicy now. And so salty. Okay. So
Okay.
anyway, spicy is the word. Okay. Salty. The salty, which stands for state and local tax, that has been in 2025, that is limited to $10,000. And it doesn't matter if you're single or if you're married, 10 grand. All right. In 2026, it's being increased to $40,000, except there's a phase out if you're making over 500. And that's married filing jointly. I don't recall what the number is for single. Okay. So that means that like high income earners, the SALT limitation, there's that it'll go away for the high income, but for most people it won't. Okay. So that means there's going to be more itemizers. So it could be that next year you will itemize because of this SALT. Illinois has pretty high property taxes. Property tax plus income tax that equals over 10 grand for a lot of couples and definitely a lot of individuals too, so
Right.
more people itemizing just on, well, it's single people, especially like they can be itemizing just based on that, but then throw in some property tax. Yeah. Anyway, or mortgage interest, and you definitely have more itemizers. So that's something to consider, that you might not be getting an itemized deduction in 2025. And then if you just wait until 2026, you might be itemizing. And even though it's going to be subject to a limitation, it'll still be worth it. So if you're in that salty category, it might be worth bigger, and you're not itemizing now, but it might be worth figuring out if you're going to itemize in 2026 or not.
Yeah, is it safe to say, Britt, and I think this is the case, but if you have been itemizing under the pre-existing tax law, where it's
Right,
got that lower limit on, SALT is basically property taxes and state and
right.
local, right? Income tax, right? That's sort of shorthand.
Yeah,
So if I've been itemizing anyway, because my mortgage interest and gifts to
yeah.
charity are all above that, then probably, I mean, almost certainly I'll be continue to be itemizing,
I would
right?
say that's true.
Again, your mileage may vary, but like, oh, that'd be a
Oh,
real exception
yeah,
if you
unless like you
weren't.
moved or,
Right.
where you
But if
pay.
I wasn't itemizing, and especially if I'm in a higher tax, like, listen, my state taxes I paid last year to Illinois were $30,000 or something, right? I only got credit for 10. Next year I could get credit for up to 40. So if I was kind of close or that limitation was really hitting me, geez, maybe I wasn't itemizing previously. Now next year I would be. So
Right,
kind of like, hey, if you already were itemizing, that would be a signal to go, listen, let's not take that 0.5% haircut next year if I know I'm itemized this year and next. But
right.
if it's close, then I need to take a look. And, one of the things we talk about, I know you do too, is like at this time of the year before December 31st is to say, what does it actually look like this year? What will it look like with next year's tax law? And you actually have to take a look at that, right?
Absolutely.
Yep.
I don't want to get too bogged down in this also, because a lot of people that give money are actually older people. Because if you have more money than you need, then that's a great time to give money away, right?
I wanted to circle back, if it's okay, onto one of the things. So these two major changes, right? And there's all these nuances
Yeah.
between the years, but basically, if you're on the itemizing side, if you are itemizing, you got that 0.5% of your income floor, right? You don't get any credit
Right.
for that. And then the flip side of the thing you said first was there's also this, listen, don't itemize at all. Just take standard deduction, right? I don't pay high taxes. I don't have a mortgage, but I can get $1,000 per person or 2,000 for a couple as far as a deduction next year. So as we just talked about a minute ago, like, listen, if I'm itemizing every year, I probably want to maybe take next year's items, donations and maybe put them into December.
Yeah.
If I'm on the other side of that coin, though, and I go, listen, I just give money because it makes sense. I'd make, it's a good thing to do. That would be a thing that, geez, maybe don't give it yet this year and save, this year's until January sort of thing. Again, just to be aware of that you might, if you don't get credit this year, you might get credit next year. And if it's, it's sort of that six of one, half a dozen of the other, I'm still going to give this to the charity. At least you don't have to do a lot of math, but you go, hey, at least I might have a chance of taking some tax credit for it next year, right?
Exactly. And that's absolutely true. So if you're not itemizing this year, if you wait until January 1st, then you have a chance, you probably can take it next year, whether or not you're itemizing.
Yeah, right. And so just these
If you
these
know
different
you're
things to think about.
itemizing, if you know you're itemizing, then there's an advantage to doing this year and next year's this year.
Right.
As
Yeah,
long
if
as
you are itemizing this year, double up. If you're
yeah,
not itemizing this year, we don't know what it looks like, but basically probably waiting makes more sense, right? Like that's at the end of the day. Yeah, that's a great
Right.
takeaway.
Yeah, very good. Awesome.
Awesome.
All right, so it's a great time to wrap it up. With that, I'm Bridget Sullivan Marmel. I've got a family financial planning practice in Chicago, Illinois.
And I'm John Shear. I got a fee only financial planning practice in Middleton, Wisconsin. Both Bridget and I are taking on new clients. We'd love to hear from you. But if you like what you hear on our show and you'd like to find a local advisor in your area, we're both members of the Alliance of Comprehensive Planners. And you can check out acplanners.org to find an advisor who thinks like us, but maybe lives in your area.
And please subscribe.